My name is Asta. I'm from Payhawk. I'm the product marketing manager here, and I'm here accompanied by Robbie Hadfield, the GM of cards and expenses in Payhawk. And today we're going to talk about why expense data breaks and how to keep it clean. So, Robbie, the stage is yours.
Thanks, Asta. Great to be here. So, apart from my role within Payhawk, sort of driving sort of our product in the card and expenses area, I've also been a previous financial controller, head of finance. So, I've been on both sides of the fence for this conversation, both as managing this sort of day to day, but also now looking to solve some of the key problems from a product perspective as well. So, excited to get into the conversation today, Asta.
Thank you, Robbie. So, as someone who is very close to finance, like basically on a day to day, Robbie, you must know that month end chaos is kind of a nightmare that the finance team wants to avoid, right? And when we see it closely, sometimes it's not caused by the volume of the expenses to treat, but also the errors being discovered too late. So now, why do you think, for example, like receipts, coding, approvals, and these processes are still a mess in growing companies?
Yeah, I think the way to look at this is we need to have a good understanding of what month end is, and I think a lot of people and organizations sort of don't really understand month end as a concept. Month end is a series of sort of processes around revenue, cost of sales, fixed assets, intercompany, board reporting. There's a huge amount of tasks here, and those can't start, all of these things, until you've got the basics sorted. And this is your key reconciliations. You've got sort of your AR reconciliation, you've got your bank reconciliation, you've got your AP reconciliation, and you've got your intercompany sort of reconciliation. The one that sort of card and expenses will naturally touch is the sort of the AP side and the bank side. But until you've actually got this working, you can't start month end. So why is this still a problem in many organizations? I think where I see the problems are engagement from employees, so that they're bought into this process, they understand the importance. There's an education issue when it comes to coding, because this is where you can get a bit of a problem with finance becoming a bottleneck if they're having to do all the coding, etc. And then it's ultimately your data rules to understand what data flows you have going into your accounting system. And one thing that I'm a big sort of believer in is if you do processes little and often, you get better compliance, you get better sort of adherence to the policies, you get actual better data. It means that you have a better opportunity almost to really seek out that continuous close sort of ambition that many finance teams have, rather than treating month end as a sort of a scramble for 5 to 10 days to try and hit a deadline. It means you can sort of be doing your month end as you go throughout the month and actually spread that work out. So yeah, I think it's an ideology thing, rather than treating things as a do everything at month end and then you have to do it very quickly. And that's where the sleepless nights are for finance teams. It's whether you can spread the workload out and then make it a lot more sustainable.
Yeah, makes sense. So doing it continuously, often. So there are some cases where some companies are still relying on employees to submit and code expenses themselves. What do you think of this? And why does this practice often break at scale?
With the greatest respect to end users and employees, I don't think chart of account coding is their highest priority in life. Sadly, I think they're hugely mistaken, and I think they're missing a great opportunity for fun and enjoyment, because coding is fun. Being slightly sarcastic here. I think it's important when I kind of referred to this in the last question, which is the data rules side of things. That in this day and age, there are a lot of opportunities for automation based on the category of sort of merchant category of spend, who the supplier is, and thinking about other sort of things like cost centers, departments, locations, these kinds of fields that are often very apparent in ERPs. A lot of these can be driven by the employee or the department that someone's in. And this, I think it should be a major ambition to really reduce the number of fields that someone has to fill in. And yes, it is definitely possible that all the employee has to do is actually take a picture of the receipt in this day and age. Everything else can actually be filled out by automation, whether that be AI, whether that be deterministic rules, whether that be sort of other sort of methods. But yeah, there are definitely the amount you reduce for the employee, the better life is ultimately.
So what do you think causes the receipt chaos, and why does chasing never work?
I think it's cultural. The culture has been driven by sort of the history of expense management to a degree. The market and employees have been educated on the concept of an expense report. And this is where put all your receipts in your wallet or in your rucksack for work. And then at the end of the month, whether it was an Excel spreadsheet or whether it's a glorified Excel spreadsheet in the software, they're basically the same. You create a culture like that. And I don't think that works, because all that creates is month-end bottlenecks. It creates payment run challenges. It creates lack of receipts capture. It creates all these problems. So what I'm trying to allude to is there's a new way of doing this, which is with sort of phone apps, with sort of reconciliation in real time. You can definitely change that culture so that people submit the receipt there and then job done, and you let the automations do their job. And I think new technology allows for a sort of a culture change here, and I see this being increasingly accelerated by AI as well, because with the AI you can make sure that you're filling in fields more appropriately. It's another automation technique here, which really does drive that cultural change. I agree, receipts chasing, especially if it's at the end of the month where you're looking for someone to submit a report, it's like the dog ate my homework excuse back at school. I mean, you can chase for it as much as you like, but it's kind of, they've lost it already, or they're coming up with excuses rather than getting the outcome that you're seeking, which is ultimately doing this in real time.
Okay, thank you, Robbie. So next, let's sorry. So what goes wrong when coding and categorization happen days or weeks after the spend?
Loss of context is the key one, because it's harder to fix. So that's the first thing, is obvious, which is the more time that goes by. So if it's 2 to 3 weeks after, for the finance team, trying to get the right context on that receipt, chasing people, that is a lot harder. And this is where people, let's be honest, will then go, why are you chasing for this? For this was 3 weeks ago. Leave me alone, is kind of the attitude you receive, and rightly so. And this is why finance teams have such a bad reputation sometimes with the rest of the business, because these are the main interactions they have with the rest of the business, which then stops finance being seen as the enabling function driving value add in the organization, and it just makes them the robotic chaser, or the battle axe, or computer says no attitude, which I don't think finance people want to be seen that way. So yeah, I think that's one problem, I think, that arises from delayed coding and delayed context. I think it really impacts on the interactions. But the other thing is ultimately how you deal with volume and data cleanliness, because if you wait and then you let the volume build up to, let's say, 100 expenses need recoding or whatever, this is where you start getting into the world of just journaling the fixes in the accounting system. And at that stage, you lose the ability really to understand sort of cost reporting on a project, because there's so many finance allocations which are just aren't understandable for employees or project managers, that the usefulness of that financial information is impaired. So yeah, I'm just thinking in my past history, I did a lot of project accounting work, contract by contract, and this is where you almost need to strip out the finance adjustments at times to give project managers or the users of financial information the clear information that they can base decisions off. So those are the issues I see, apart from obviously the manual work of actually having to fix some of these things. I think I wanted to talk about the wider implications on the organization, because, yeah, correcting 200 expenses, okay, it's a bit annoying, but I think it's the wider impact on finances relationships, but also on how useful financial information is. They're much more important. And once again, I go back to if you do the basics right, everything else tends to follow. I'm a big believer in that one.
Very well said. Robbie, when it comes to exceptions, how this should be handled, and that finance can only touch what truly matters.
Yeah, I think there's a few ways to deal with exceptions. I think you're ultimately in a world where what can you do proactively, what can you do reactively? So I'll split my answer into two. So proactively, if you know sort of there's an exception coming up, you need to purchase on a card that would normally go through a different process, or a travel request which is out of policy or whatever, you have the opportunity to sort of request this in advance, build the audit trail, put the accountability in the right place for the business ultimately, so that there's no surprises. So that's the ideal world, is using requests and using sort of the proactive approvals, because you build a good audit trail there. If you're dealing with it reactively, I think the challenge there becomes, I think maybe I'll add some more context. Finance generally live in a world of expectation versus actual. So this is where a lot of us are ex-auditors. Some of us will have done analytical review in auditing, or sort of targeted testing on different sort of financial statement balances. I think what you're doing is, if you look at this in the context of expenses, you have an expectation of what expenses are happening, how they're coded, how they go through the system. And those can kind of be routine, and they flow through the process very quickly. If you have exceptions, they're the ones you want the flags on. So I think if you see sort of this as a volume, and you say 80% of expenses can go through automatically pretty much with a simple sort of checks without huge amounts of due diligence there, you're fine, as long as you can identify the stuff that's looking a little bit weird. And this is where I'm just thinking of examples here. Client entertainment's a good one. That's always one that, depending on who the customer is, leads to anti-bribery policy sort of expectations or additional controls needed there. But ultimately, a lot of this can be pre-configured with good sort of setups, good field setups, custom fields related to specific types of spend, etc. So, but I think my answer there, how you deal with exceptions reactively, is you need to have an expectation of what's going to be routine, and then what's not routine, and then ultimately, that means that your attention is very much focused on the not routine stuff.
Okay, clear. So, when it comes to accounting ready expense data, what do you think does it look like before it reaches the ERP?
Ultimately, you don't want to edit anything in the accounting system. I mean, that's the goal. I think if if any company is looking to chase the holy grail, which is the continuous close, you need to have the bookkeeping or the accounting done at source in the spend management system, and that almost doing any adjustments as you need them there. So a good example would be, I'm thinking of subscriptions sort of spend at the moment. Some subscriptions, you might have an annual subscription and you may need to defer this over 12 months or whatever. This is something you can do in Payhawk because we support sort of what we call amortization schedules in the platform, or deferrals for a European, depending on how you want the language. But if you can do those kinds of adjustments, which used to be a month-end Excel spreadsheet, which you'd have to have the calculation of sort of the deferrals on there, if you can do that at source, you get a huge automation benefit, and then there's no adjustments within the accounting system. I think little things like that can make a big difference, but it does support that narrative of achieving the continuous close.
And finally, what do you think is the fastest way to reduce month-end rework without adding any headcounts?
I think the first thing there is really sort out your automation. I think it's really looking at systems that automate a lot of fields up front and have a lot of logics behind that, because a lot of accounting data is rules based. It's very sort of, there's patterns, it's very pattern data. And it ultimately, if your spend management system or other tools, I mean, you can do this with AP or within Payhawk if you can have it all in one place. But ultimately, if you can build good automation logics, build a very clear set pattern of data and data definitions that you're looking for, ultimately that's the big time saver. Because one, you're taking it off the employee who's likely going to get it wrong anyway, because they always do. Maybe I'm wrong. Maybe some finance teams have managed to train employees perfectly and I'm delusional here. But if they have, well done, because I know that's a big challenge. But ultimately, if you can get the automation right at source, the employee's not going to get it wrong. It's automated for the finance team. It's within expectation, that within expectation versus outside expectation sort of concept that I talked about earlier. And if you can achieve that, there's less sort of month-end, what I will call hacking to get everything ready so you can actually start. So doing those basic ledger closes becomes a lot easier.
Thank you, Robbie. Interesting interviews.